Good day, everyone, and welcome to today's class. In today's class, we are going to be talking about what? We are going to be talking about correction of what? Correction of errors. Correction of what? Errors. That's the key things that we are talking about. And this is a very what? This is not really a bad topic. It's not really that difficult. But the key things for you to really understand this topic that we are going to be talking about is you have to understand the double entry principle very well. You have to understand the double entry principle very well. And you know already, and like I always make mention in every from the beginning of this class to where we are now, that we have 5 elements of what? Of financial statement. We have 5 elements of what? Of financial statement. We have the assets, we have the liability, we have the equity, we also have the income, and we also have the what? The expenses. So now, you know, if this one is increasing, if this one is what is reducing, what are the things that we are going to do? And I leave that to every one of us to also think of. That if you want to increase asset, what are you going to do? Are you going to debit or you are going to credit? If you want to increase expenses, are you going to debit or you are going to what? To credit? And if you want to reduce them, what are you going to do? Is it debit or is it credit? And the remaining 3 as well, which is the equity, the liability, and income. If you want to increase them, what are you going to do? If you want to reduce them, what are you going to do? So what we are going to be talking about here in correction of errors, from the word errors, the error has occurred. We now need to do what now? We need to correct it. From the word correction of what? Correction of errors. The error has what? The errors has occurred. We are now finding a way to what? To correct the what? To correct the error. That is what we are what? That is what we are talking about here, is how to correct the error that has what? The error that has occurred. So in these words, here now, don't forget what I'm saying. You really need to understand the principle of double entry very well when it comes to what? To correction of error. And the starting point is about knowing the types of error that can occur. Knowing the types of error that can occur, and that is not enough. You also need to know if this type of error occur, what am I going to do? How are you going to correct it? And I'm saying to you that you need to remember your double entry principle. And don't forget that there are 5 elements of financial statement. I keep on saying that every class. Maybe to the end of this class, that is when I will stop. We have 5 elements of financial statement: assets, expenses, liability, equity, and an income. Now, when it not comes to what? To errors, is that, you know, for example, if you remember in our previous class, if you post a transaction into what? In a ledger, at the end of it, you should balance. In terms of what? When you want to extract your what? Your trial balance. Your trial balance what? To balance. And if you remember, maybe some 3 classes ago, we talk about posting and extraction of what? Of trial balance. You can see in that situation, if you remember, check your notes, that the trial balance agree. What we have in the debit side of the trial balance is also the same thing with what we have on the what? On the credit. Meaning that the trial balance was the trial balance agree. And what is trial balance just meant for? Trial balance is just to check the accuracy of the ledger. Meaning that if your ledger is is fine, if you have entered the correct entry, then the trial balance should also agree. The trial balance should agree once the ledger is is correct. So, but if the trial balance, there are some error that will occur. That the error is what is present, but the trial balance still agree. Let me now tell you something now, that we have 2 types of work. We have 2 types of error. There are some error that will occur that the trial balance will still do what? The trial balance will still agree. And there are some error that will occur that the trial balance will not. Meaning that what? Don't forget, there are how many types of error? There are two types of what? There are two types of error. We say we have one error that will affect the trial, and we also have another one that what error that will not affect the agreement of the trial balance. Meaning that what? There are some error that will occur, the trial balance will not agree. What you are going to have on the debit side of the trial balance will not be the same with what you are going to have on the credit side of the trial balance. And there are some error that will occur whereby the trial balance will still agree, but there's error. And in assurance, we have what we call what directional testing. Directional testing, we use it to check in the situation whereby the trial balance will agree, but there may still be some error in the trial balance. So in audit, we have what we call directional testing. And in directional testing, we test debit side of the trial balance for overstatement. And we test the credit side of the trial balance for understatement. Don't forget, it's a very simple stuff. Have it at the back of your mind, and if as I'm going, if there's anything that you don't understand, the chat box is open. Just put it at the end of it. I'll respond to every one of the questions. There are two types of error. There's some error that will call that the trial balance will not agree, and there's some error whereby the error is there, but the trial balance will still agree. If you have the total of the debit side of the trial balance to be 1,000 naira, the credit side of your trial balance as well will also be 1,000 naira. But there are some errors there, but the trial balance still agree. Now, our focus more, or we are going to focus more in the situation whereby the trial balance does not agree, meaning that we are having differences. What you have in the debit side of the trial balance is not the same with what you have on the credit side of the trial balance, meaning that there's a difference in what you have in the debit side of the trial balance. Maybe sometimes you can have 10,000 naira in the debit side of the trial balance, that is the total. You are now having You are now having 9,000 on the credit side of the trial balance. So meaning that the trial balance does not agree. That is what we are going to be focusing. So if the trial balance does not agree, meaning that we are having differences. We are having difference. Then we are not going to open a temporary account. We have what we call a temporary account. And that temporary account is what we call trial balance. That temporary account is what we call trial balance. The temporary account that we are going to open in the situation whereby the trial balance does not agree. We have a temporary account called suspense account. We have a temporary account called suspense account. So this suspense account now is a temporary account. It's a temporary account that at the end of the day, we are still coming back to check the reason why it does not balance. At the end of the day, we are still going to come back to check the reason why it does not balance. Let me now give you a brief example. That let's say, for example, now I make mention of earlier that we have two types of words. We have two types of errors. This is trial balance. You have your debit and you have your credit. And don't forget, you know already that every item in the financial statement, can be categorized into how many? Every item in the financial statement can be categorized into 5. Is either is asset, is either is liability, is either is equity, is either it is what? Or it is what? It is expenses. So you know already that this particular word, you see this debit of your balance. The debit of your trial balance contain two things. Meaning that what item that you are going to see on this debit side of the trial balance is either it is what assets or is going to be what expenses. An item that you're going to have, the next one we have what liability as well. This is liability. We also have what equity. This is also what? This is also equity. So the equity will be where? The equity will be on the what? On the credit side of your what? Of your trial balance. The equity will be on the what? On the credit side of your what? Of your trial balance. So we have the what? The last one, which is what? Income. So income as well is going to be here. So if what we have done is what is correct, at the end of the day, these two sides need to what? These two sides need to agree. Meaning that what you are going to have on the what? On the debit side of your what? Of the trial balance. And what are the two items that you are going to have on the what? On the debit side of the trial balance is either it's going to be asset or it's going to be what? Expenses. And in your what? On the credit side of the trial balance, you are going to have what? Liability, you are going to have what? Equity, and you're also going to have income. So if there's no error, if our ledger is what is correct, let's say for example now, if we are having what? Let's say for example, we are having 2,000 here. We should be able to have what? 2,000 here as well. So meaning that the trial balance would agree if there's no what error. But there are sometimes error can still exist. Please listen to me very well here, please. There are some times that error can still exist, but the trial balance will agree. What you have on the debit side of the trial balance is still going to be the same thing with what you are going to have on the what? On the credit side. You know, I mentioned earlier, there are two types of errors, which you can also see here as well. There are how many types of error? There are two types. Error which do not affect the trial balance total. And we also have the second one, which is D, that every one of us can see here as well. Errors which do affect the what? The trial balance or total. Okay? And to focus more on the errors which do affect the what? The agreement of the trust. Error that will affect in the situation whereby we are going to be having differences. We are going to be having what? We are going to be having difference. Let's say, for example, now I'm having what? I can be having, let's say, the debit side of the what? The total of the debit side of this trial balance. Let's say it is what? It is on 1,000. I'm not going to be having the total of this one will now be what? 1,000 what? 1,500. So we are having a difference now. The two sides does not agree. 1,000 on the total of the debits and 1,500 on the total of the what? Of the credits. So in that situation now, we are now going to have the what? A temporary account. A temporary account called what? Suspense account. We are going to have a temporary account called what? Suspense what? Account. So this suspense account is what we are now going to have. So meaning that what now? In this situation now, I'm not going to have, you know, this one is 1,000. This one is what is 1,500. So I want to make the what now? Let me do something. I want to make this. I'm having credit of what? 1,500. I also want to have the what? A debit of 1,500. So I'm not going to have the what? A temporary account called what? Suspense account to be what? To be 500. So that at the end of the day, the two sides will do what now? The two sides will not agree to be what now? The two sides will now agree to be 1,000. The two sides will now agree to 1,500. This one as well will be what? 1,500. In the first place, I'm having what? I'm having 1,000. And here I'm having what? 1,500. Two of them does not agree. In that situation now, the credit side is more. It can be the two. The debit can be more than the credit. The credit can also be more than the debit. In this example that I'm using now, in the first instance, we are having what? 2,000, 2,000. That is fine. The second instance is that what? Oh, the credit side is showing 1,500. This one is now showing what? 1,000. So meaning that what? We need to have a temporary what account. In that temporary account, and I'm not going to have, we call it what? Suspense account. Meaning I'm not going to bring 500 naira here on the debit side. So that at the end of the day, I'm going to be having what? 1,500, 1,005. Now, exam requirement. In the exam, there are two things the examiner can give. Is it that the examiner will give you the difference? Now, you know, in this situation, the difference is what? 500. Or the examiner will not give you the difference. Meaning that what? Is either it will be given, or number two, yeah, let's say you are going to find it by yourself. How everybody is getting what I'm saying. You know, this difference of 500, this difference exists at two levels. There are sometimes the examiner will give you that, oh, the trial balance does not agree as a result of this also amount. And I'm also using that as an example. That the trial balance does not agree as a result of what? 500. So it is given. So you just need to what? To raise some journal entries and open suspense account. But now, let's now assume that it is not given. If it is not given, then the first thing that you have to do is that what? You are going to prepare the trial balance by yourself. You are going to do what? You are going to prepare the trial balance by yourself so that you're able to identify the difference by yourself. The first thing is that what? You are going to prepare the what? You are going to prepare the trial balance. And the main reason why you are preparing the trial balance is for you to do what? Is for you to do what? Is for you to identify the difference. It's not going to balance. It's not going to do what? It's not going to balance. You are the one that will not do what now? You are the one that will not determine the difference. Meaning that what? At the end now, when you prepare the trial balance, you are going to find the difference. So that is the other way around when you are finding it by yourself. But the most popular one is that what the examiner could have done what now? The examiner could have given you the difference. So you just need to write down. Okay? And we are going to solve those two questions as well. Where majority of the time, the examiner will give you the difference. That the trial balance does not agree. The trial balance does not agree as a result of this amount. Whether it's the debit side of the trial balance that is more than the credit side. The difference between the debit and the credit side will be given to you. But there are some times whereby the difference will not be given to you. What you now need to do in that situation is that what? You have to prepare. You have to do what? You have to prepare the trial balance by yourself so that you're able to get the what? So that you're able to get the difference. So that you're able to get the difference. Once you now get the difference now, you now need to open your journal now. One of the words we are going to be using journal entries. Journal to correct some of this error. We are going to use word journal to correct words. That is one of the uses of word journal. It's also part of the book of prime entry, which we are still going to talk about. When we say book of what prime entry, we can also call it what book of what original entry. It can also be called what subsidiary book. Don't forget. Book of what prime entry can also be called what book of what original entry. It can also be called what? Subsidiary words. It can also be called subsidiary. And one of the words, this book is what? Journal is also part of it. Please hold on.
Hello, can anyone hear me? Please, I don't know if I'm the only one that is not hearing anything anymore.
Yeah, sorry. It's not my network.
Okay.
All right, I'm sorry. Yeah. So now what I'm talking about now is I'm talking about what we are going to correct what we are going to do the correction of errors now using what? Journal. And I'm also making reference to what we call what? Subsidiary book. When we say subsidiary book, it's also known as what? The book of original entry. We can also call it what? The book of what? Of prime entries. And when we say subsidiary book, when we call it the other name to be book of original entry, when we call it the other name to be book of what? Of prime entry. This book are what? These books are those words, are the book that transactions are what? Are initially what? Recorded before being transferred to the ledger. That is the first book. When we say book or subsidiary book, or we call it the book of original entry, or we can also call it a book of prime entry, are those books in which what? Transaction are what? Event and transaction are initially recorded before being posted to the world, before being posted or transferred to the ledger. Please don't forget that. When we say what? Subsidiary book, it's also known as what? Book of prime entry. It's also known as what? Book of original entry. And what do we use this book for? These books are what? Are books that transaction events. Transaction and event are what? Are initially recorded before we transfer it into the what? Into the ledger. We have many classification of them. We have purchase day book, the sales day book, the return inward day book, the return outward day book, the journal, the petty cash. These are various types of what? Of subsidiary book. The journal, the cash book, the return inward day book, the return outward day book, the purchase day book, the sales day book. They are book of what? Original entry. And when we say this book are book of original entry, why are we calling them book of original entry? Is because these are books in which transaction and events are what? Are initially recorded before we transfer it to work, before we transfer it to ledger. So one of the uses of what? One of the uses of journal is to correct what? Is to, or we use journal to also what? To correct errors. We use journal to also what? To correct errors.
Yes, we can't hear you again. No.
Can you hear me now, please?
Yeah, I think it's better.
All right. So I'm saying that well, we have book of original entries, and one of them is what? Journal is also a book of original entry, and there are many of word of journal, but we are going to be using it to do some corrections of errors to date. And please don't forget what we are talking about. The topic is clear. Correction of what? Errors. And there are two types of words. There are two types of errors. There are some error that will occur that the trial balance will agree, and there's some error that will occur that the trial balance will not agree. So we are going to be focusing on more on what errors that will occur that the trial balance will not work, the trial balance will not agree. And if the trial balance does not agree, meaning that the word, the credit, the value of the credit and the debit are not the same. Look at the first example. I'm writing 2,000 here. 2,000 in the debit, 2,000 in the credit. That's fine. Well, let's not say we have this whereby we are having to be what 1,500. We are now having debit to be what to be 1,000. So we that what the credit side of the trial balance is more than what is more than the debit. So for us to now close this account now, we are not going to have a temporary account called what suspend what account. So here now, in this debit side, I'm not going to have the word a suspense account of what of 500 so that the account works. Later in the long run, we are not going to be conducting some investigation on what we are going to be conducting some investigation on this 500 naira. And that is what we are going to do. So now, please don't forget this. You know this already, but I'm sorry to be saying it all the time. Don't be tired of it. This is asset. This is liability. This is what equity. This is what income. And this is also what? This is also expenses. Because we need this, the increase and decrease. If you want to increase asset, debit. If you want to reduce it, this. Liability, credit. Equity, credit. This is also credit. Debit, debit, and debit. And you do what? Debit as well and credit as well. So you can see now that these two, they have the same words, they have the same treatments. Okay, let's practice this. Let me cut the word very long. Let's work as an account. And the approach to this particular topic is going to be two. We are going to be talking about situation whereby to not balance, and that is what we are going to be dealing with more. And that the trial balance would not agree. And if the trial balance does not agree, like I informed earlier, that the examiner can give us a difference. And the trial balance does not agree as a result. The trial balance does not agree as a result of these differences. So now I need to do what? Now I need to prepare the account so that we're able to correct the word, we're able to correct the errors. Now look at this question 1. It's a very, very simple topic. And it's not because I'm thinking it, but it's not something bad. Now, what's the requirement of this question? The requirement is that what? Prepare your journal entries with appropriate word narration to correct the errors. The B part is saying what? Prepare the suspense account. And the last additional requirement is what? Prepare the statement of to what the net profit after the corrections. And this is a wonderful question to start with. Now, you know where we are. We are in what? Correction of what? Errors. Meaning that some of this additional information that is presented to you, the entry that they have performed is not correct. The debit and the credit that they have performed is not correct. So you are not there now to do the right entry. Okay. The account officer of Enware and Co. was unable to agree the trial balance, meaning that what the trial balance does not balance as a result of what something. Trial balance does not what say the difference of what 75,200 was placed on the debit side of the suspense account. Okay, so you can see in this question now, the examiner is already giving you the difference. Now the difference, why the trial balance does not agree, is as a result of this amount, 175 what? Is as a result of 175,200. That's the reason why the trial balance does not agree. Like I think I informed every one of us earlier that there are two. The examiner can set the question in a two-way. In this situation now, you are giving the what? In this situation, you are giving the difference. That the trial balance does not agree as a result of what? As a result of this particular amount. So that is what? That is fine. That is what? That is fine. Now, after a careful review, because we are still going to conduct investigation on why the difference. Why the difference? We are not just leave it and go. With the tribunal that's agreed now, we cannot start preparing our what? We cannot start preparing our statement. This 500 that we are having here now, this 500 that we are having here now, we still need to conduct investigation. Meaning that at the end of our investigation now, we're able to identify the error, and the suspense account will be what is zero. Whatever you have on the debit of your of the suspense account, at the end of your investigation, it's also it's also going to be the same. Now let's now start. Let's say after a careful review of the accounting entries in the Help Word and Co books, the following errors were detected. 1. A sum of what? 120,000, representing a credit sales to a customer, was posted to this account. No, was posted to the credit side of his account. Please, I will need everybody now to watch. But before that, because this topic is simple, but let me try as much as possible to make it simple again. Look at this thing. And by now, if I ask any question now that you want to increase this asset, I don't expect what, because the time that we are spending now is a little low than the time that is remaining. So at this time, I don't expect that, oh, if I want to increase asset now or credit, you don't need to be thinking of it as at now, it should be debit. There's no need of thinking again, because you are behind this for a while now. Okay? Note the situation whereby that account will increase. Note the situation whereby it will reduce. And I'm also worried, look at this for a minute now, before we now go to the questions. Make sure that even though if someone wakes you up now, even though you don't have the knowledge of accounting entry before, but as of now, and that is why we are starting from the beginning as well. Whether some of us we are science, some of us are commercial, but then you don't really like accounting very well. So it's like you're learning it again. So please now look at this again. I'm not in a hurry. And what I usually do in every of my classes, be able to listen to my explanation very well. If I solve one question, it could have covered what 70% of what I want to talk about. But please look at this now. Look at this for 1 minute. Sorry if you know it's already. But look at this now before.
Please, we can't hear you again.
Yes, I'm not saying anything. I just say we should look at this. And can you see my screen, please? Just look at this. I have a reason for that. I'm not saying anything. Just look at my screen. Debit and credit, increase and decrease. That's not good. Additional information 1. A sum of 120 representing a credit sales to a customer was posted to the credit side of his account. Is this correct? Please, if you are in good environment, please unmute yourself. The chat is also what? Is also open. This number 1, is it correct?
I feel it's correct.
All right, you feel all right now. Why?
Okay, because credit sales are recorded on the credit side since it's an income to the business. They are posted on the credit side of ledger's account since it's an income.
Hold on. Let's say a sum of 120,000
Yes.
representing
Yes,
a credit sales to a
Yes,
customer.
I think it is an account receivable and it's an asset, so it's supposed to be debited on the debit side. I think.
Yeah, thank you very much, Mrs. Kashi, and thank you very much for, I think, Mr. Akim or someone that made that vote himself. A sum of what? If you are selling to customer, thank you very much. The first that you're saying that the account, we are making the sales, the account needs to be credited. Yes, sales will be credited. Sure, that one is fine. But don't look at it from that angle. They say a sum of 120,000 representing a credit sales to a customer. A credit sales to to a customer was posted to the credit side of his account. So meaning that customer account was a credit sales. We now credit the customer. No, since the customer has not paid, is a credit sale, then that gives rise to to trade receivable. That gives rise to now? To trade receivable. So meaning that now? Receivable has to be debited. Because we have now received payment. The correct accounting entry now is credit the sales account and the customer account need to be debited. Customer account need to be debited, not credited. Please let me hear from every one of us. It's a very simple topic, but please let's make it interactive. Let me also hear from you as well. What do you think? Say it out. A sum of 120,000 naira representing a credit sales to a customer was posted to Was posted to the credit of his account, meaning that the customer account was credited. And if you remember when we are talking about control account, we make mention of we have in control account, we deal with how many ledger? 2 ledger. The receivable ledger control account. We also talk about the payable ledger control account as well. And you know that once you are having receivable, it means that there are some people that that is owing you. There are some people that you have performed service to. There are some people that you have sold some goods to, but they have not yet their payment has not yet been completed. And that's why we are having a receivable. If it is a cash and carry, no receivable. Okay? So the right you can see now, and that's why please have the mindset that everything that is here now from the beginning, once it is a correction of error, it means that something is wrong. What you are having in each of these additional information, there's a mistake somewhere. Everything that is here is not correct. Have that mindset. So don't always believe that what is here is correct. Have that mindset that it is not correct. And that is why we are calling it a correction of errors. Let me go to the second one. A check of 30,000 naira paid into the bank was later dishonored, but the customer account was debited with 3,000. Is the accounting entry correct? Forget about 30,000 and 3,000. Let me now ask, is the accounting entry correct? If you remember contract, is the accounting entry correct? A check of 30,000 naira paid into the bank was later dishonored, but the customer account was debited with what? 3,000. Debiting the what? The customer account. Is it correct? That's number one.
It is correct.
Someone say no, it is not.
It is correct.
Yeah, it is correct. Lima, it is correct. You are debiting
correct.
All right, now why? Someone said it is not correct. Why?
We are supposed to debit the bank account and customer's account. 30,000 paid into the bank account is an asset, and coming into the bank account will increase the value of the bank account. And once an asset is increasing, you are supposed to debit it.
Okay.
So debiting the customer's account is an error on its own. Before we talk about the 3,000 naira issue.
Okay. Okay. Thank you very much for your contribution as well. You can see now, let's say the check was dishonored. Okay. The check was dishonored, and the customer account was debited with 3,000. My question now is that what? When you debit the customer, now, is it correct? Someone say yes, it is correct. Another individual also say it is not correct. That is true. Let me also hear from other people as well. What do you think? The customer account was debited. Someone said that it is what? Which position are you now? Debiting the customer since the check was dishonored. Is it correct or it is not correct? Someone say yes, it is correct. Another individual also say no, it is not correct. I also want to listen to other people's opinion apart from this.
Yes,
please hold on. Let me be identified by name. Okay. Oluwasegun, please go ahead. Please, you're raising up your hand.
The 30,000 naira that was
okay, Mr.
paid into the Oluwasegun.
Okay, sorry, Mr. Oluwasegun, sorry. Okay,
yes,
the
30,000 naira is supposed to be an account payable.
No, hold on.
It's correct. What I'm saying is that it's correct.
Okay, hold on now. Let me ask you, please, hold on. Okay. Let me start from this now, so you can be replying me yes or no. Okay. Since the check was dishonored and the customer account was debited, is it correct or it is not correct? Yes or no?
The transaction was correct, but that it is dishonored, so makes it an error.
No. I want you to respond to me in another way.
Okay.
What I'm saying now is that the check was dishonored. That's number one. And the customer was the customer account was debited. Debiting the customer account, is it correct or it is not correct? Yes or no?
It is correct. Yes.
Okay, now hold on now. Thank you very much. Yes, you say it is correct. Why do you now say that it is correct?
Yes, the customer is expecting to be, we are owing the customer. That's why we are issuing a check to him. So if the check was not dishonored, his account is expected to be debited. From our end, we have debited it, but we have not known that the check has been dishonored. That's what makes it an error. That's for my thinking anyway.
All right. Anyway, thank you very much for your contribution as well. Any other person, please? I see how many.
The customer or the customer is to the check the paid into the bank account.
All right, now hold on. Let me come in now. Thank you, everyone. Let's say a check of 30,000 naira paid into the bank was later dishonored, but the customer account was debited. Debiting the dishonored check. Debiting the customer account is correct. Debiting the customer account. If you have a dishonored check, if you remember the format of your control account when you're dealing with receivable. When we are saying receivable, we are talking about customer. There are different names I make mention there. We can call it trade receivable, control ledger, control account. We can also call it the sales ledger, control account. We can also call it the customer account. So when you are in customer, you are have it at your mind that the accounting ledger is receivable. When you are in about customer on credit, we are selling to customer on on credit. have it at the back of your mind that we are referring to what's receivable. So debiting the customer is correct. Debiting the customer account is what is correct. What is wrong here is the amount in terms of what is supposed to be what. It's supposed to be 30,000 naira. You not debited the customer account with what? You not debited the customer account with 3,000 naira. But the accounting entry for you debiting the customer because the customer is still owing. Assuming that the check clear. If the check clear now, you remember the format of check received from customer and the check clear. It's not a bounce check. Then that means what the customer account will be what? It will be credited. Because it is a receivable. And if your receivable is reducing, you credit it. Receivable is an asset. If receivable is reducing, you credit. So if you are receiving payment from if you are receiving payment from the customer, we credit the customer. If you are selling to the customer, we are going to debit the customer. Okay, so debiting the customer account is what is correct. The problem here now is about the figure. It's supposed to be 30,000. They are now recording what? They are now recording 3,000. That is where the error is. Okay, let's go to the second one. Purchase day book was overcast by what? By 18,000. Meaning that purchase is overcast by how much now? By 18,000 naira. So if purchase is overcast, the next thing that you have to think of is what? Purchase is what? Purchase is what? Purchase is what? Categorize it among this. Is purchase an asset? Is purchase a liability? Is purchase a equity? Is purchase income? Is purchase expenses? So purchase is what here now among these categories, among this element of financial statement. Where can you categorize purchase?
Expense.
Thank you very much. Purchase is what? Purchase is an expense. So now you are now being told now. You are now being what? You are now being told that purchase was overcast by what? By 18,000 naira. Then what do you do? Purchase was overcast by 18,000 naira. What do you need to do? Expenses was overcast now. What do you need to do for you to? Because I want to reduce it now. What do you need to do? Anybody, please unmute yourself. Let me also hear from you. Because this particular topic has to be it has to be interactive class. It's not really a format based like that.
Okay, to reduce expense, you have to credit.
Yeah, thank you very much. To reduce expense, we have to credit. So meaning that what now? We have to credit what? We have to credit purchase the book with what? With 18,000 naira. Then the next one, Solian is also raising up his hand. Please go ahead, please.
Okay, sir. Well, I said the purchase day book is an asset, like purchasing an inventory. Like, is it correct?
And no, if you are looking at it from inventory, the inventory is asset. But if you are looking at it from purchase is what? Is expenses. You understand? And you see, among these 5 elements of financial statement, that we have, you see these 2. Income, the 4th and the 5th, now you are going to find it in what? In the income statement. So is either an item that's going to be in your income statement is either going to be income or it's going to be expenses. Sales now is a what? Sales is income. Sales is what? Sales is income. But purchase is what? It's expensive. It's from your sales, you remove your people to get. Your profit or your loss. So profit or loss. Why the next one, ability and equity, you're going to find it in where? You're going to find it in the state of financial position, which we are still going to look at. So now, since purchase was overcast by what? Since purchase was overcast by 18,000 naira, then you have to do what? You have to credit purchase. Please try to unmute yourself, please. we have what now? The fourth one to be what? They say the debit side of the supplier's account was overcast. So who can try it now? They say supplier's account was overcast by 60,000. What is the accounting entry?
Hello, sir.
Yes, I'm with you, man.
Hello, can you hear me, sir?
Yes, I can hear you. Go ahead, please.
Okay, I said like if the question is indicated that purchase of inventory, so we know it's an asset.
And that's what I'm saying, that if it is purchase is expenses. If it is what inventory, you are going to recognize expenses and you're also going to recognize assets.
Okay.
Okay, but if it is what purchase, you don't know what they are buying, whether it's inventory or any other thing. Purchase is what is expenses, but inventory is what? Inventory is assets. You are not being told now that what a supplier account was overcast by 60,000. What is the accounting entry?
This is a payable account.
Thank you very much. And payable, okay, now hold on now, please. I want you to take it one after the other. You said this is a payable account. Thank you very much for that. Now, payable now, where can you categorize payable in your words in the element of financial statement?
It's liability.
Yeah, thank you very much. The liability. Then what is now the accounting entry now?
We'll debit to reduce liability.
Yeah. Thank you very much. That's it. So first of all, that item, you need to first of all categorize it. Oh, is it asset? Is it liability? Is it categorize it first? Payable is a what? Is a liability. If liability is what? Is reducing. If it is what? Increasing. What are we going to do? Since the liability was now what? Overcast now. So that means that we need to reduce the supplier's account, the trade payable account, by how much now? That means that we need to debit the what? Debit the trade payable account by what? By 60,000. You know, this topic deal with what? Accounting entry. Debit and credit. Now the next one, don't worry, I'll solve everything. It's not true, just word of mouth. Let's say returning in word of 9,000 naira was omitted in the customer account. So meaning that this one was what now? Omitted, was not recorded at all. So since it was not recorded, so that means that you are the one now that will now record the transaction. It was not recorded initially. So what is now the accounting entry now? And let me ask someone now. Mr. Joshua, can you try, please? What do you think is the accounting entry?
Okay, return inward is coming in. Is coming in. It should be debit.
Return inward is what is coming in. Okay, so that means that you are going to debit return inward account. What is now the credit now? Since the customer is returning the goods back to us. So what are we going to do to the customer account? The return inward.
The customer.
Thank
credit
you
the
very
customer for it.
Yes, credit the what? Credit the customer and what? Debit the return inward account. Thank you very much. The next one, they said discount allow was overcast. The first thing that you have to tell now is what? Discount allow. Where can you categorize discount allow? Yeah, that's the number one thing. And Mr. Hakim now, your name is at the top. Sorry. So discount allow there. Discount allow is what? What do you think is the accounting entry?
Discount allow is an expenses.
It's can expenses. Thank you. Yeah, thank you very much. Discount allow is can expenses. That is what I want to hear for. So if it is what is kind of expenses now, then they say it was overcast. Then what will you do?
You credit it.
Yeah, thank you very much. Since it's what discount allow, you know that discount allow is what is expensive. So please don't forget. You have to try as much as possible to able to categorize all these transactions into 5. You have to try as much as possible to be able to categorize each of them into 5. This is discount allow now. You know that discount allow is what is an expensive. And they say it was what? Discount allow was overcast. So if discount allow was what was overcast now, that means that what expenses was overcast. Then you need to reduce it. If you want to reduce expenses account, what will you do? It's credit. A credit sales of 2 office machine of 24,000 each was entered into the sales day book. A credit sales. So let me answer this question. This one, we have 2 types of words. We have 2 types of receipts. We have 2 types of words. We have 2 types of receipts, or we can even say income. We have what we call capital receipts, and we also have what we call revenue receipts. Please note it down. We have how many types of income, or sometimes you can also call it receipts. We have 2. We have what we call revenue, and we also have what we call this one. We have revenue receipts, and we also have what we call capital receipts. Don't forget, how many types of receipt do we have? In terms of what? How many types of income do we have? We have 2 types of what? We have 2 types of income. We have what we call capital receipt, and we also have what we call revenue receipt. And when we say revenue receipt is coming from your from your ordinary course of your revenue receipt is coming from your ordinary course of business. What are you known for? Oh, I'm known for selling stationery. So, and that is what we are going to call sales. But if we have any other income, any other income, we are going to call it capital we are going to call it capital receipt. Like when you are selling office equipment and you are selling your asset, the proceed that you receive is what we call capital receipt. Don't forget to you have multi-choice question in your exam. When you sell fixed assets, when you sell your assets, your fixed asset, the proceed that you received from selling is what we call capital receipt. So this capital receipt now, when we are doing very soon we'll be doing preparation of financial statement. All this statement of profit or loss and statement of financial position. We'll be doing the preparation. I know your software can do that for you in your workplace. So I'm only going to say this is my sales, this is my revenue, if it is if it is coming from my principal course of activities. That is, what are you known for? Oh, you are selling this type of goods. So anything that you sell to your customer, any income that you receive, that's what we call revenue receipt. But if you are not selling your asset, things that you are not known for, if you are not receiving any other income apart from your day-to-day operation, that is what we call capital receipt. The receipt, the income that you receive from your normal business, this is what I'm known for, is what we call revenue receipt. But if you not have any other income apart from that, that is what we call capital. That's what we call capital receipt. So this particular one, selling of office machine, is not going to be taken as It's not going to be taken as part of as part of sales. We are going to take it as part of other income. So meaning that this particular now, since it was entered in the sales day book, it was entered into the sales day book, that means that sales account is already credited. We now need to debit it back. We need to debit it back because it's not supposed to be there. It's not supposed to be there. Okay. They say the statement of profit or loss for the year ended disclose a net profit of 240. So now let's not start now. What's the first requirement? They say you should prepare a journal entry with appropriate narration. So meaning that you need to explain. Then you are going to see the way I'm going to do it now. So now let's not start with this question now. Okay. So So let's now go to the question now, which is the first one. They say a sum of what 120 representing a credit sales to to customer was posted into the account, was posted to the credit of his account. So let's do the journal illustration of what has happened initially. Let's do a journal illustration of what has happened initially. So let me just do it here. What has happened initially is this. This is what sales account. Sales account is what is credited. That is, and trade receivable is also what? Trade receivable is also what? Is also credited. Trade receivable is also credited with what? Is also credited with 120. So meaning that what you are having what? Credit. But now, this one is what is correct. This one is not what is not correct. This is what they have done. So I'm not going to say what now receivable. The sales account is what is correct. So where we are having problem now is on what? The trade receivable. So credit and what? And debit. You know, initially that what? 120 is already here. And I want to have what now? I want to have 120 on the debit side. I want to have 120 on what side? On the debit side. Meaning that I want to have a balance now of 120 on this debit side. This first one, let's say this is 1. This is what 2. This one is correct. Crediting the revenue account is correct with 120. But this account should have been what? Initially, if it is correct, they should have debit this account with 120. But now, since in this ledger now, 120 is already been credited. What I will now need to do is what? I will just say what now? 120 multiplied by what? 2. I will have 240. Initial what? 120. You know, I'm going to have a balance CD of how much now? 120. So that is what we are going to do. The receivable account will be what now? The receivable account will be credited with what? With 240. So that you can see now at the end now, I'm having a what? This is 240, and this is also what? This is also 240. So I'm going to be having the balance of how much now? A balance of 120. Let me explain again. If you have any question, please ask. Initially, what you need to do, number 1 is correct. Sales account was credited and receivable was now also what? Credited. That is wrong. Receivable need to be what? Receivable need to be debited. So since the first entry is showing that what? Receivable is what? Trade receivable has been credited. Then you just need to what now? Just need to multiply by what? By 2. So I'm going to debit the receivable with what now? With 240. So with that 240 now will knock off that what now? That 120. So at the end of the day, I'm having what? I'm having 120, which is the goal here too. So you just say what now? Trade receivable. Trade receivable will be what? Will be debited with what? 240. And we're also going to have what? 240 taken to the what? Taken to the suspense account. You know, the trial balance does not agree. And if the trial balance does not agree, the examiner has given us the what? The difference already. that the reason why the trial balance does not agree is as a result of what? Is as a result of this particular amount. Sorry, my pad is not really writing very well. Very consistently. So now, since the examiner said that narration is what is required, you are not going to say what? You just put a narration here. Being what? Being correction, just give it a simple name, being correction of what? Correction of errors. So that is the narration. So that what this entry that you are performing, people should be able to have what happened. And even though if the question is what is silent, you still need to put what narration in your journal entries. Now this journal that you're saying what debit this account, credit is as a result of these particular activities that are occurred. So that's why you just use the words, what you have done to really provide a narration as well, being correction of error when credit sales was credited to the customer account. So that what other stakeholders can also understand that this is what happened. So the next one, they say what a check of what 30,000 naira paid into the account was later dishonored, but the customer account was debited with 3,000, which the difference now is what is 27,000. So for question 2 now. All right, I'll say explain everything again. Just hold on. Even though once you understand this question, there's not really a big problem for you to solve any other question. Okay. So let me explain this 2 now. On check was what? Check was dishonored, and the check was dishonored. The entry is what is fine. Since it's a dishonored check, the customer account should be what? The customer account should be debited. But the debit entry is correct. The entry that they have performed is what is correct. What we are having problem now is on what? Is on the amount. It's supposed to be what? 30,000 naira. Now enter what? 3,000 naira. So meaning that there's a difference of what now? There's a difference of 27,000. So the trade receivable, now you need to add the 27,000 naira back to it. So trade receivable need to be debited with what? 27,000. While the suspense account will be credited with what? 27,000. And you are also going to put the words, you're also going to put the narration as well. Being what? Being correction of words. Being correction of $30,000 entered as what? As $30,000. Then the next one, they say purchase day book was what? Was overcast. The purchase day book was overcast by how much? Purchase day book was overcast by 18,000 naira. Purchase day book was overcast by what? By 18,000 naira. if the purchase day book was overcast by what? By 18,000 naira. And purchase is what? Purchases and expenses. Purchase is what? Purchases and expenses. So expenses is what now is overcast. So you need to what? You need to reduce it now. So if you want to reduce expenses now, what will you do? You credit. Suspense account will be debited with what? 18,000. Why what? Purchase. Purchase will be credited with what? 18,000 naira. Then you put the narration as well. Number 4 now. They say what? The debit side of the supplier's account was overcast by what? By 60,000. The debit side of what? Supplier's account was overcast by what? By 60,000 naira. The supplier is what? And thanks to provider answer. Thank you so much. The way you respond to it. By saying what? Supplier's account is a what? Is a trade payable, right? That's the accounting name for it. And trade payable is what? Trade payable is a liability. And liability is a what? So since liability was overcast now, then that means that what liability was increased more than what the actual amount by 60,000. And then we need to reduce it now. Since it was what? It was overcast. So we are not going to say what now? I'm sorry. Let me look at this question again. The purchase, okay. We have done this. Number 4, they say the debit side of the supplier's account was overcast by what? By 60,000. The debit side of the what? The supplier's account was overcast by what? By 60,000 naira. So meaning that the what? The credit side now is more. So what we need to do to the what? To the supplier's account is that the what? The supplier's account has to be what? They say the debit side. Hold on. I think the question is clear. Look at it very well. They say the debit side was what? Was overcast. The debit side was what? Was overcast. So since the debit side was what? Was overcast, then you just need to do the what? The other way around of it. By taking this what? By taking this 60,000 naira to the what? To the credit side of that account. You can see the name is not just supplier's account was overcast. They say the debit side of supplier's account was overcast by what? By 60,000 naira. So since the debit side is not as if it is what, you can see there's a indicators to it as well. They say the debit side was overcast. Then what you just do, suspense account will be credited with, debited with 60,000 naira, and the supplier's account. Then we'll not say what? Trade what now? The trade payable. The trade payable will be debit, to be credited. You can see the question is what is clear. Say the debit side. The debit side. The debit side of the supplier's account was overcast. So do the corresponding entry by saying what? So if we take it to the what? To the credit side of the supplier's account. So you have turned that particular what? 60,000 naira to what? To nil. Number 5, the return inward of 9,000 naira was omitted in a what? In an account. 9,000 naira was omitted. So 9,000 naira was what? The return inward of 9,000 naira was omitted in the customer account. So meaning that what? The transaction has been performed, but return inward now, there are 2 entries for it. Return inward need to be debited, and the customer need to be what? To be credited. So meaning that what? In this situation, it is the credit side that is what? That is missing. It is the credit entry that is what now? That is missing. The credit entry is what is missing. By what now? By 9,000 naira or 9,000 naira. The return inward account is already debited. So it is the what? The receivable, the customer account that is omitted. So it's not as if the transaction has not been performed. The transaction has been performed, but there is a what? There's omission in one particular what? In one particular ledger, which is the customer account. So Suspense account is what? Will be debited with 9,000. And the receivable account to be what? The trade receivable. So that is that about that. Then the next one is let's say it was a discount allowed was overcast by what? Discount allowed was overcast by 4,800. Discount allowed was overcast by what? By 4,800. And someone make mention of it there. I think it's Mr. Akim, that what discount allowed was what? Discount allowed is an what? An expenses account. And since the expenses account was overcast, so that means that we need to reduce it. And if you want to reduce it now, we have to do what? We have to do credits. So and that is that about this one. Success account will be debited with what? 4,800, and discount allowed will be credited. Okay. A credit sales of 2 office machine. And I think, okay, hold on. Let me do this one last. And that is all. That is all. They say, well, you can ask any question, then I will explain it again, then your question can come in. Let's do this 6 now. Let's say what? A credit sales of 2 office machine of 24,000 naira each was credited. Was entered into the sales they wrote. So meaning that since it was entered into the sales, that means that the sales account is already been credited. But this particular transaction is not supposed to be part of your revenue. It's not supposed to be part of your revenue. It's not something that you report in your trading account. It should be things that you take to your profit or loss. So I'm going to do what now? Since it was taken to sales account initially. So sales account need to be Sales account needs to be debited with 48,000. How do we get this 48,000? Is by saying 24 multiplied by 2. Then we'll go again by saying what now? Then we are not going to take it to what? That's what we call disposal account. And our next topic after this one is this particular account. We call it non-current asset and depreciation. That will be our next topic afterwards. After this particular topic, non-current asset and depreciation. So this particular transaction is not supposed to be It's not supposed to be part of your sales, but it's taken to sales. That is why we are removing it. Sales account is an income account. So the 48,000 naira is already being placed on his credit side. So you need to remove it now, which is if you want to reduce income account, what will you do? You debit. That's why we are debiting the sales account, and we are taking it to disposal account. And don't forget that we have 2 types of receipt, like I mentioned earlier. We have what we call capital receipt, and we also have what we call revenue receipt. the proceeds that you receive from your normal operation, your normal activities are what we call revenue received. But if you dispose anything that is not part of your core business, like selling office equipment is not really part of your core business. So any income that you now generated, we call it what capital receipt. And when you even sell your non-current asset, the proceeds that your asset, the proceeds that you receive are what we call what capital receipt. So this particular sales now is not going to be part of your sales account. It should be part of your disposal account. So let me now, this is all the entry. Then the first one, this is everything. The first one is a credit sales to a customer. A credit sales of a customer was a credit sales. You sell a credit to customer, and the sales is 120,000 naira. The customer account was now credited. If they are making a sales to the customer account need to be the customer account need to be debited. And this is the entry that they have performed in terms of what you can see it here too. One is that the sales account is credited. That is fine. But receivable was now also being credited with 120. That one is wrong. So since that 120 is already sitting on the credit side of the receivable, and we want to remove it, what we need to do is by saying 120 multiplied by 2. So meaning that you're going to have 240 on the debit side of your trade receivable, so that it will knock off this 120. So at the end of the day, now you can see you're having a balance in your receivable account of 120. And if you are thinking in such way by since is 120, since is 120, and then what we should do is let's debit the receivable with what? Let's debit the receivable with also 120. So 120 on the credit side will cancel the 120 on the debit side. But I still need to have a balance of 120 in that account. And that's why we're multiplying by 2, so that at the end of the day, we are still going to have 120 in that particular customer account, because the customer has not made payment for it. So, and the examiner said that narration is required. There are some questions whereby the examiner can say that narration is not really required. But if the question is silent, you still need to put narration. And I think I have a question on that as well, whereby the examiner said that narration is not really required. I think there's actually, okay, you can see it as well. They say prepare the word. Look at this question now, question 5. They say prepare the journal entry and the suspense account to effect the correction as appropriate. Journal narration are not required, because the narration is still going to take some seconds away from you. So here now, the examiner is saying that this is your exam question. It's not as if I form it by myself. It's saying that the journal narration is not required. That journal entry is not required. And if the question is silent, you need to put narration. Even though like this question 1 that you have here, that the examiner is clearly saying that narration is what is required. If the examiner does not even say that narration is required, you still need to You still need to put narration, even though the question is silent. So the first one is is sales of 120. The sales of 120 and it was entered in the debit side of the customer account. The customer account needs to be debited. It's not supposed to be credited. And they say the second one is a check. The entry, when you have a dishonor check, the customer account needs to be debited back, because till the check cleared, that is when the customer account can be credited. Then here now, the entry is the customer account is debited. That is fine. But the problem here, 30,000 naira is now 30,000 naira. Purchase the book was overcast. Purchase is an expenses, then you credit was overcast by 18,000 naira. So since it's purchase is an expenses. You want to reduce expenses, you do the credit. They said the debit side of the supplier's account was overcast. You can see they say the debit side. And that's why it was so, meaning that the credit side now will now be the supplier's account will now be credited by 60,000. Since the examiner is saying that the debit side of supplier's account was overcast by this. So just do the corresponding entry by taking that 60,000 naira to the credit side. Return inward of 9,000 was omitted in the customer account. So meaning that the return inward account is already being performed. Return inward is already been debited, but it was omitted from the customer account. So that means that the customer account needs to be what? Need to be credited. Discount allowed was overcast. Discount allowed is an expenses. If you want to reduce expenses, you do what? You credit. A credit sales of 24,000 naira each was entered into the sales table. It's not supposed to be part of the what? The sales table. It's supposed to be part of the what? It's supposed to be part of your disposal account, because it's not a revenue receipt. It's only revenue receipt that you're going to enter in the what? In the card, not capital receipts. So capital receipts should be recorded in what? In the disposal account. We're still going to do that. There's a disposal that can either be gain on disposal, or there can be loss on board of disposal. So now, please, if you have any question, please unmute yourself. Let me go back to the solution. So this is it. If you have any question on this, you still need to, this is just the first requirement. You still need to prepare what a journal entry, suspense account. And the suspense account, what you're going to have on the debit side and what you're going to have on the credit side of the suspense account must be the same. The debit side and the credit side must be the same. If the two are not the same, it means that the error has not been fully detected. So let's not prepare that one. Let's not prepare that suspense account so that you watch everybody you see it. But you write what 240 instead of what 120. 240 is what is correct. So by saying what 120 multiplied by 2, you have what 240. The sales is what is 120. The sales is what? The sales is 120, and what was entered in the what? In the wrong side. So I just need to what? I just need to multiply it by what? By 2. Say 120 multiplied by 2. I think we have what? 240. Then 240. If I'm having 240 on the debit side now, you can see it's really. I'm taking this one out so that at the end of the day, I'm going to have what? A balance of what? 120 in that account. That's it. So let's not prepare the what now. Let's prepare the journal what now. Sorry, let's prepare the suspense account. Let me do it by the side here. Sorry, let's stick it here.
Hello, sir.
Hello, please let me know if you want to unmute yourself. Please go ahead.
Can you hear me, sir?
Yes, I can hear you.
Okay. I'm still in the question 1 because I'm kind of confused. When you prepare the statement and the ledger, at the debit side, we still have balance sheet of 120,000. So why are we still writing 240 there? Why don't we treat that question 1 the same, like the way we treat it, like treat the other question like that too?
And now I still explain this again as well. That what they have performed is what? Please hold on. What they have performed is what? The account was initially what? The account was initially what? Credited. You can see number 1, sales credited. That's fine. Receivable is also being what? Since it's a credit sale, the account is not supposed to be debit. The account is not supposed to be credit, it's supposed to be debit. Since it's what? This credit sale, so you need to recognize the asset. So initially, if assuming that they are doing the right thing, is that what? The receivable need to be debited, not what? Not credited. Then you now need to correct the error now. When you are having challenges now, it's not on the sales account. The sales account is credited, that's fine. But they are not still, you can see, you can't have credit. You can only have one credit and you have what? Debit. So I want to eliminate this word now. I want to eliminate this 120 that is sitting down on this credit side. It's not supposed to be here. It's supposed to be on the debit. So that's why you have to multiply this by 2 now, so that you have 240 on the word on the debit side, and the 240 will knock off this balance of 120 now. So meaning that what you're going to have what now? At the end of the day, the balance in that receivable ledger will be what? It will be 120. This is debit. You are debiting what? You are debiting receivable what with on 240. Then the balance that you are going to have in that receivable at the end of the day is the what? Is the 120. By saying what? 240 minus 120, the initial 120, then you're going to have what? 120 back. So let's prepare the what? The suspense account.
Hello, sir.
Yes, I'm with you. Please go ahead.
Okay, now you said the balance, the initial balance now on the trade receivable is 120,000. So why are you still writing 240 there on our journal entry?
Yes, now the journal entry that you are going to perform it to be what? 240. So that in the receivable ledger, you are not dealing with ledger now, you are dealing with what? Entries. You're not dealing with what? With ledger. At the end of the day as well, since your journal entry that you're performing now is that what you're saying the receivable should be debited with what? With 120. At the end of the day, if the receivable is debited with what? Oh, sorry, with 240, then you know there's one balance. There's already a what? A 20 or 120 that is sitting there in that receivable ledger. So since you are debiting the receivable now with 240, it will reduce that credit. That you know there's already one credit of 120 in the receivable. Then you are debiting the receivable with 240 now. So meaning that the what? At the end of the day, the balance that you're going to have in that receivable will be what? It will be 120. But the entry that you're going to perform is what? Is 240, not 120.
All right, sir. Thank you, sir.
So in the what? In the suspense account now. So I have my what now? Sorry, I don't know what is wrong with this part. I have my debit, and I also have my what? I also have my credit. So now let's go back to the question and see, since the difference is already been given to us. I say what? The account officer of Endwell Co. was unable to agree the trial balance. The difference of what? 175 or 175 200 was placed on the debit side of the suspense account. So 175 200 was placed on the suspense account. So this is the what now? This is the trial balance word difference. The trial balance difference of 175 200. Then we also have what? We also have another thing. So what we just need to be doing is that let's now be looking at the question now. What are the entries that we have performed? Initially, starting from the first one, we say that the suspense account should be what? Suspense account should be credited with what? 120. So suspense account should be credited with what? 120. So, and that one is relating to the what? To the trade receivable. Trade receivable of what? 240,000. Then we'll go again now. What are the things that we have debited the suspense account with? Number two, we say suspense account should be what? Should be credited with 27,000. Suspense account as well should be credited with what? 27,000. And that one is also relating to receivable as well. Trade receivable. Sorry, holiday, I don't like to use it, so it's not writing very well. So I have what? 27,000. Then the next one, which is number three, suspense account should be debited with 18,000 error. Debit suspense account with 18,000, 60,000, 9,000. 1869. Okay. This is relating to purchase. $18,000. I think we also have another 60,000. And we also have what 19,000 there. This one is about pay. And this one, let me go back this. Sorry. The 9,000, yeah, is return inward, which is receivable. Then I think we still have another one. This one is the sales is not going to suspend. We have discount allowed. Suspend account should be debited with what 4,800. So all right, very well. So that is the end of that. So please, we just need to do what now? Just need to add. We need to add all the words. The data of the debit side, the data of the credit side as well. So at the end of the day, if what we have done is what is correct, if what we have done is correct, then the trial balance should work now. Trial balance should agree. So please, Mr. Akim, now help me to add the debit side. All right, Mr. Joshua, help me to add the credit side, please. Just add the debit side. Mr. Kim, add the debit side. Mr. Joshua, please help me to add the credit side. The two of them should be the same. If it is not the same, it means that there's a mistake somewhere. It's not an account that will have a debit balance or anything.
The credit side is 267,000.
All right, thank you very much, sir.
Yes, sir.
So let me also base it on the assumption that I'm going to have the same thing here. So please, Mr. Akin, confirm that. Okay, so there's still another requirement, which is like 3 in 1.
The debit side is 267,000. Yes, it's correct.
It's correct. So they're the same. Thanks.
Confirm.
So the third requirement, they say prepare a statement to adjust the net profit. Prepare a statement to adjust prepare a statement to adjust the net profit. And I want to tell you something. There's a mnemonic when it has to do with preparation of this income statement. I pray I should remember, but let me just, this is trial balance, debit and credit. Think this one is hard, but this one is what is less. As a mnemonic that you can use to remember this. If it is if it is the debit side, if it is you have to look, and please, you are preparing income statement. First of all, I say you. I've explained this again now. I say what I'm trying to get now is from number 1 question, our suspense account to be credited with 240, and now we are bringing 120. Am I bringing 120 somewhere? Please hold on, please. I still have 240 in my suspense account. Please, can you unmute yourself and try to explain what the question is? Please, Mr. Oluwaseun, please go ahead.
Yes, please. I know the one Suliat was referring to. Actually, if one is not careful, one will be confused. Yes, you explained quite all right. The first 120 will knock out the one that was used to credit the account wrongly, while the second 120 would be the one that is expected to be debited. So, and that is why for the correction of the error, that is why the 240 is necessary there.
Yeah.
And that's my understanding anyway.
Yeah, your understanding is what is correct. In terms of what, I want to knock this 120 out. This is what has happened initially. 120 was sales account was credited. Receivable account was also credited, but receivable account is not supposed to be credited. I want to have a balance of 120 on the debit side of that receivable. So for me to have what now, look at this. This is like maybe a mathematics of time to look at it. I'm having 120 here. But this 120 now is not, I want to, but that 120 is not supposed to be on this credit. It's supposed to be on this debit. So what should I do? It's just for me to add, okay, if I have what 240 here, this 240 word will take care of this word, will take care of this 120, so that we're able to have a balance of what now. So next time, if I now open my word, if I open my receivable again now, if I open my, this is my trade receivable, I'm having what 120, and that is my goal. This is my goal. That I want to be having what 120 in the receivable. On what side? On the debit side. How are everybody able to get this? I know it's just, I'm not just please ask. You don't understand something. You're not taking it back. This, if one student has a question, other students can be thinking of that as well. So what I'm not trying to say, oh please everybody, do you understand this question? If you don't understand, please, because question and correction of error, they are the same. The only difference is that in this question that you have now, the difference is already being given to you. The examiner. So in the other way around is that what that will make the question to be different is when the difference is not given to you. And if the difference is not given to you, you have to prepare the initial trial balance so that you're able to get the difference. Here now, you don't need to prepare the trial balance. You understand? The other way around is that is what we also have a question like that here too. Let me put it so that everybody will understand what I'm saying. This is what I'm referring to. Okay, is that not a question? Okay, you see in this question now, this question 4 that you have, you can see the examiner has given you the word or the item. Look at this question. They say on investigation, you discover the following. You can see in this question now, the examiner does not give you that, oh, the suspense account was debited or it was credited with this difference. It is you now that you have to look for the difference by yourself. And the reason or the way you are going to do it here now is that what you are going to first prepare the trial balance. You are going to ask yourself now, payable, is it going to be on the debit side of the trial balance or is it going to be on the credits? Allowance for receivable, where is it going to be? Expenses, salary, wages, purchase, overdraft, depreciation, discount allowed, revenue, your equipment, your capital. Where is it going to be on the word? And what you are doing in trial balance, there's no calculation in trial balance. It's just for us to tell us now that, oh, payable now, is it going to be on the debit side of the trial balance or is it going to be on the what? On the credit side of the trial balance? That is what you are doing. So that at the end of the day, you're able to get this difference by yourself. Because here now, the difference is already given to you, 175,200. In that question 3 that you're looking at now, you are the one that will determine the difference by yourself. So the entry that you're going to perform is the same. Now, when you are not prepare what income statement, when you're not asked to prepare income statement, look at this. I'm saying what? Debit, credit. You know that's what the trial balance. Trial balance can either have a credit or a debit. So you are going to think if that item is going to be on the debit side of the trial balance, if that item is going to be where it's going to be on the debit side of the trial balance, and it is what understated, you should add it. Hold on, please. I want to get this thing very well so that this mnemonic will work to guide. Just hold on, let me think of something. Okay, let's say for example, let me write something here. Sales is going to be on the credit side of the trial balance. Let's now say the sales is on the cash. The sales is on the cash. I'm going to add. Sure. So meaning, sorry, this thing will change because I think I forget this thing. Why? Now, is this to be OU? To be OU. If sales is going to be on the what? On the credit side of the trial balance. If it is understated, you are going to add. Let's say you now have a return inward now. Return inward is going to be on the what? On the debit side. Let's now say it is what? Overcast. You are also going to what? You are also going to add. Let's now say, for example, now, purchase is what is under cash. You are going to less. Let's say income is overcast. You're also going to what? You're also going to less. Now, hold on. With this now, you know already that trial balance is divided into two, right? Your debit and your what? And your credit. If that item, like income now, income, like what? Sales. If it is income, and income was what? Was overstated. If income was overstated, you need to less it. That one is sure. This is what? Over. If it is over, income was overstated. That means that we need to less it so that we're able to get the one. If sales as well is overcast. I'll be sorry, if let's say sales is undercast, that means that we need to what? We need to add. This one is what? U. This is less. This is what? Add. Don't worry, I'm still trying to come up with something. I forget this. Then we have credits. This is return what? Return inward. Let's say return inward was what? Was overstated. If return inward was overstated, you should what? We are adding return inward overcast. Let's now say the opposite, return outward. Return outward is now what? Undercast. We are now going to what? We are now going to less. We are now going to what? We are going to less. So this item, return inward, is going to be on the debit. So debit now, if debit was overcast, you should add. If debit was what? Overcast. Like your what? Your expenses. If your expenses was what? Your expenses is overcast. you're also going to add as well. So that is add. But the other one will not be the other way around. So now, you now need to write this now. I've gotten what I need. And don't forget this, because this one will serve as a guide to you when you're solving what? When you're solving questions. When the examiner says that you should prepare the words, the new statement. This is debit, and this is what is credit. So if the item, let's say OU, if the item is going to be on the debit side of the trial balance, and it is what? It is overcast, you had. If the item is what? Is going to be on the credit side of the trial balance, and it is what? It is understated, you what? Be less. And I think I made a mistake before by saying what you owe. It's supposed to be what? Owe you. If the item is going to be on the debit side, don't forget this thing, because it's true, it was a careful analysis that I discovered this. That was when I was in school there in Susha, because I studied accounting. If the words in the debit side, if the debit side, look, trial balance is going to have what? It's going to have two sides. It's going to be what? It's going to have a debit or it's going to have a credit. Now, if you know that that particular item is going to be on the what? On the debit side of the trial balance, and it is what? Understated, you should have. It is overstated. Let's say, for example, now, what are now the item that will be here? You know that already. Item that will be what here is either going to be what? Expense, or is going to be what? Asset. Item that will be here is either is going to be what? Income, or is going to be what? Liability, or is going to be what? Equity. And you are preparing what? You are preparing statement of profit or loss. You are preparing what? Statement of profit or loss. So you are only dealing with what? Income and expenses. You are only dealing with what? Income and what? And expenses. You are only dealing with what? Income and expenses. So if expenses is what? Is overcast, you have. No, please don't forget. This is a very popular topic in your exam. If you have this type of topic in your exam now, it's not new. It's not new. It's something that is what? That is regular. Correction of error is regular. When you are now asked to prepare the statement again, you are asked to prepare what statement? What you need to do, statement of profit or loss, is going to contain two things: expenses and what? And income. The statement of financial position will contain the remaining three, which is asset, the liability, and what? And the equity. So if that item is going to be on the debit side, and it shows that it is what? It's going to be expenses, since you are preparing what? Statement of profit or loss. So if it is going to be what? Expenses, if it is going to be what? Assets, but it's going to feature where? It will feature in the debit side, that you are going to make use of it in your what? Your statement of profit or loss. Item that you are going to make uses when you are preparing your statement of profit or loss is either some of them can be on the debit side, some of them can also be on the credit side as well. Like return inward. Now, return inward is an asset, so you're also going to make use of it when you're preparing your income statement. So if that item is going to have what balance? Is going to be on the debit side of the word of the trial balance, and it is what? Overstated. You are going to do what? You are going to hide. If that item is going to be where? Is going to be on the what? On the credit side of the trial balance. It's going to be on the what? On the credit side of the trial balance. And it is what? If that item is going to be on the credit side of the trial balance, and it is understated as well, you also add. Don't forget, if that item, this thing is not writing very well, sorry. If that item is going to be where? Is that done? If that item is going to be on the debit side of the trial balance, if that item is going to be on the debit side of the trial balance, and it is what? It is overstated. We say we should do what now? We should add it. If that item is going to be where? It's going to be on the credit side of your trial balance, and it is what? Stated. You should do what now? You should what? You should less. That is 1. So what about if the what? If the item, what about if the item, this is 2. You know, this is 1. We say that what? If the item is going to be what? If the item is understated. If the item is what? Is overstated. If the item is what? Is overstated, and it is going to feature where? It's going to feature on the debit side of your trial balance. You should add it. If the item is going to feature on the what? On the credit side of your trial balance, and it is what? It is under. You should do what? You should less. Then the number 2 now is that what? What about if it is going to be what? If it is going to be on the debit side of your what? Of your trial balance, and it is what? It is understated. You have to do what? Less. What about if it is going to be on the credit side? What about if it is going to be on the credit side of your trial balance, and it is what? It is over. You should do what now? You should less. Please write this now. Let me also write it very well for you so that everybody will get this. Please let me change the color. Look, you are going to prepare statement of profit and loss now. So write this. This is.
Do you mean less for understated and overstated? The second one.
You know, it's just like I'm matching now. You understand? This is 1. We say what? If it is what? Over, and the item is going to be on the debit side, we should do what? We should add. If it is what now? Under, and the item is going to be what? And the item is going to be on the credit side of your what? Of your trial balance. Like income is what? Is understated.
Please let the over be on the same row so that we know when it is to be debited and credited, and both are over. So we know. So that means that the one you are writing you here now, so under credit, let it be still over, and then we know it will be less.
Okay,
so
no problem.
I think we'll be able to understand better.
All right, no problem. I can still do it in another way that you made mention. Thanks for that. Now let me just finish this now. First of all, if that item is going to be on the what? On the debit side of your trial balance, like expenses. Let's say expenses is what? Is overcast. If expenses is what? Is overcast, expenses is going to be where now? It's going to be on the debit side of the trial balance, and it is now overcast what you had. Then let's now say, for example, now, you know, the other way around, this is 1, this is 2. What about if the item? If the item is what now? It's going to be on the debit side, like expense. I'm saying what now? Here, expenses what? Overcast. Expenses what? Overcast. Add. What about if it is not expenses what? Expenses what? Undercast. then you do what now? You less. How everybody's guessing that. Then if it is now what now on the credit side, if it is going to be what? Oh, the item is going to be on the credit side, and it is what? It is under cash. The item is going to be on the credit side, and it is under cash. You should what? You should add. Then over, you should what? You should less. Like income now, let's say income is what? Is over cash. If income is over cash now, you do what now? You less. Let's say income is what? Is understated, what you had. Income is now what? How about everybody get this now?
No, please, this last illustration now contradicts what it appears to contradict what you have been saying before.
Yes, no, okay, sorry. I'm trying to remember it as well. What I'm saying now is that, well, at least this last one is what is clear now. If that item is going to be on the debit side, it's going to be on the debit side of your what, of your trial balance, like expenses. Expenses is going to be on the debit side of your trial balance, and expenses is now what? Overcast. If you have what? Expenses what? Overcast now, meaning that we are going to do what? We are going to add. That is the O. The O means what? Over. The U means what? Under. So if the word, the item, I'm still coming, explaining it again. If the item is going to be on the debit side of your trial balance, and it is what? Overstated, e.g., expenses what? Expenses is overcast. Purchase is what? Is overcast. Return inward is what? Is overcast. Return inward, you can say, please write this example in your book as well. Expenses is what? Overcast. Purchase is also what? Overcast. Return inward is also what? Overcast. Those items now, you can see that I'm saying overcast now. Return inward, overcast. Expenses what? Overcast. Purchase, overcast. These items now, they are going to be on the debit side of the word of the trial balance. So if they are going to be on the word on the debit side of the word of the trial balance, and it is what? It is overcast, you do what? You had it. If the item is going to be on the what? On the debit side of the trial balance, and it is now what? Undercast, you do what? You less. You do what? You less. You what? You less. Like what now? Expenses what? Undercast. Purchase what? Undercast. Then on the credit side, if you discover that the item is going to be on where? The item is going to be on the credit side of your trial balance, and it is now understated. Like your sales, your revenue is going to be on the credit side of the trial balance. It is now what? Understated. You do what? You add it. Your sales is now overcast. Then you do what? You less. This is what I'm saying. The debit. The debit. The debit. If it is going to, oh, if that debit side is going to be overcast, you what? You had it. If it is what? Undercast, and you know that, oh, this item is going to be on the what? On the debit side of the trial balance, and it is what? It is undercast, you do what? Less. If that item is going to be on the credit side of the trial balance, and it is what? Undercast, you had. If that item is going to be on the credit side of the trial balance, and it is over, you do what? You less. That is it. Let's not prepare. I hope everybody, please, do you get this? Anything that you want me to explain again, please ask yourself now before I'll go to the Zoom. It's not going to, I mean, in less than a few minutes now, solve that requirement. See, don't forget this, please. Don't forget this, please. If that item is going to be on what? On the debit side of the trial balance, and it is over, hard. If it is going to be what? And if the item is going to be on the debit side and it is under, less. If it is going to be on the credit side of the word of the trial balance and it is over, you had. It is going to be on the credit side and it is over, what? You less. It's as simple as that. Thank you, everyone. So let's now go now. Sorry for taking your time. Let's say what? The statement of profit or loss for the year and then disclose the net profit. So you're not going to say what? Profit reported now. The profit reported is what is 210. The profit what reported is what is 210. So let me do it on that here. So requirement what? Requirement C. Profit what? You are going to start with what? Profit reported. Profit what? Profit reported. Can I have it in 2 naira? The profit reported is what? Is 210. So we are not going to say what now? Add, right? Then we say what? Less. So we are not going to look at what are the items. This is like our answer now. This one. This is our guide now. This is our guide now. So profit, once you say profit reported, the next thing you do what? Add and less. I'm going to add what? Item on the debit side that is what? That is overstated. Item that is going to be on the debit side that is all overstated, I'm going to add. And I'm also going to add item on the words that will be on the credit side of the trial balance that is what? That is understated. We don't need to look for that. Okay, discount allow was overcast. Discount allow is going to be on what side of the trial balance? Anybody? Discount allow is going to be on what side? Okay, debit, thanks. So, and it is now what now? Discount allow was overcast and it's going to be on the debit side of the board of the trial balance. So now, before you reply now, look at this now. This is just the first time that you're learning this. Discount allow was overcast. So what am I going to do now? Am I going to add? I'm going to less. Discount allow was overcast by 4,800. So based on what you have, right now, thank you. So then we'll go again. Return inward of 9,000 was omitted. There's no problem. Debit side of the supplier's account was what? The debit side of the supplier's account was overcast by what? Was overcast by 60,000. The debit side of the supplier. You can see now, supplier's account, the trade payable. Trade payable is not item of what? Statement of financial position, or is not item of what? Statement of profit or loss. It's items of what? Statement of financial position. So you're only going to be looking at what? Item of what? Statement of financial what? Or statement of profit or loss, not item of what? Statement of financial position. How they get what I'm saying? Like here now, they say the debit side of the supplier's account was overcast. This supplier's account is trade payable. Trade payable is not item of what? Statement of profit or loss. It is item of what? Statement of financial position. So it's not going to feature in what I'm doing now. Okay. The purchase day book now. Purchase is what? Is item of what? Statement of profit or loss. Then I can be dealing with this now. They say purchase day book was overcast by 18,000. And that's the last one, sir. Purchase day book was overcast by what? By 18,000. Purchase is going to be on what side? Purchase is going to be on the what? The debit side of your what? Of your trial balance. Is now what? Overcast. What are you going to do? You know that as well. You do what? You had. So I'm also going to say what? I'm also going to say we're also going to have the purchase what? Purchase day book that was what? Purchase 18,000 naira. That is what? That is overstated. And these are all. This 18,000. This is what? 22,000. So this 22,800. So 22,800 now plus what? Plus on 110. This is 32. Then you need to look for what? Sorry. You need to look for, since we have add now, you need to look for item that we are going to do what now. Now say what? Less. So now go back to the question. Is there anything that was understated? Is there anything that was overstated? Now, if you look at this item, credit sales. A credit sales of word of machine now for 24,000 naira was entered into the word to the sales day book. So that means that what sales now, and the sales is what? Sales is overstated by how much now? By 24,000 naira. Sales is what? Sales is overstated by what? By 24,000 naira. Sorry, 40 what? 48,000 naira. Because this 24,000 naira is not supposed to be what? It's not supposed to be there. That 48,000 naira is not supposed to be sales. You are not going to supposed to take it to what? To sales. So sales is what now? Sales is overcast. And if sales is overcast, you do what now? Less. Sales overcast. $48,000. And whatever you have at the end of the day, that is what we call what? Adjusted what? Adjusted net profit, or we can even call it adjusted what? Adjusted net profit, or corrected what? Corrected net profit. So if I say 32 now minus what? Minus this, I still have 800. 32 minus 48, that is 184. So my profit, my actual profit, if there's no all this error, is going to be what? 184,800. And that's all. Don't forget this when you are preparing this. If the item is going to be on the debit side of the trial balance and it is overstated, you had. If it is going to be on the debit side of the word of the trial balance and it is understated, you less. If the item is going to be on the credit side of the word of the trial balance and it is what? It is understated, you had. And if it is overstated, you what? You less. Sales is overstated here, and that's why we are lessing it. That 48,000 naira. So this is it. And this is the end of the words. And this is the end of this question. And every other question that we are going to solve is going to be the same thing. The only thing that can be different is that what? This suspense account. This one that you have here, this suspense account of what now? This suspense account of this one, trial balance different. There are some times that it will not be given to you, that you are the one that will look for it by yourself. That is the only difference. All questions is what? In correction of errors is what is the same. The only key things that you have to do is what? Try as much as possible to be able to what? To categorize the item based on the element. Is it going to be what? Asset? Is it going to be what? Liability, equity, income, and what? And expenses. What about if this one is increasing? What about if this one is what? Is reducing? Try as much as possible to be able to perform all those entries. So, and we correct the error using what? That's one of the uses of what? Of journal. You can use it to what? To correct what? To correct error as well. Then at the end of the day, they will ask you to prepare the journal entry with a narration. Like this question now require a narration. Then you also prepare what? A suspense account. At the end of the day, your suspense account should be what? Should be nil. In terms of what they are going to have at the debit side and the credit side should be what? Should be the same. Then if the question is what is full, they're also going to ask you to prepare what we start this by preparing what? Statement of profit or loss. And if you want to prepare the statement of profit or loss, please have this at the back of your mind. If the item is going to what? Either is overstated or is what? It is understated. That is why we are trying to adjust the profit again. If the item is what? It's going to be on the debit side of the trial balance and it is what? It is overstated, hard. If the item is going to be on the what? On the debit side of the trial balance and it is what? It is under, less. The item is going to be on the credit side of the trial balance and it is under, you had. And if the item is going to be on the what? On the credit side of the trial balance and it is what? Is it is over, you are going to what? You are going to less. So you say the word the profit reported, this one will be given to you. So meaning that what the actual profit should be what? 184 what? 800, not what? 200 and what? 210. The profit reported had some lesson, you get the word, the corrected profit. So this is it. If you have any question, please unmute yourself. Things that we're talking about. The only question that can be different is when the difference is not given to all question you got in correction of error, they are the same. You are just talking about accounting entry, debit and credit. That's what you're dealing with. So now, please, do we understand? Let me also hear from, even though you don't have the questions, but let me hear from every one of us that is in this live class now, whether yes or no. Please, do you understand? If there's anything that you want me to explain, please ask. Do you understand? Let me hear.
Yes, but we still need to take our time to look at the stores very well. It's not that easy.
All right, no, yeah, this is the first time. So we are still going to solve a question on this again. So just have a review of this. So if there's no any question, thank you everyone.
Please, I want to know, what's the required calculator for the exam?
You can use your normal scientific calculator.
Okay, all right.
All right.
Thank you.
Yeah, you're welcome. So thank you everyone. And see you in the next class by God bless.
Thank you, sir.
All right, thanks.